Hello, I'm Angela Antetomaso in the CNBC newsroom. Today our guest is Luke Richdale, Head of Emerging Markets Equity, JP Morgan. Welcome, Luke, and thank you for being with us.
Thank you.
We are going to a phase that's a bit cautious for investments at the moment. What is your take on this second quarter, actually first half, I would say?
Yeah, I think if we think more broadly about emerging market equities, if I look at what my colleagues in our multi-asset team are doing, now remember they can invest anywhere globally, fixed income equities. They're overweight equities and they're overweight in emerging market equities. And the reason for that is that we think we're in the sweet spot of the cycle. We've got good growth and we've got little inflation within emerging markets. And that's a great environment. Now, we've seen some more volatility, but that's a good thing because we'd seen too little before, and investors need to understand that.
So you think the volatility we are seeing now is anyway good for markets, is good for,
It's more, Angela, it's more
just
normal.
moving up things,
It's been very subdued for a couple of years. And as active investors, a little bit of volatility is no bad thing for stock picking.
So this is mostly for emerging markets, or this is globally, because we are seeing volatility mostly globally, as you know?
Yes, that's right. And actually, we've seen emerging markets continue to outperform developed market equities as they did in 2017. And I think the key thing for us always is how sustainable is it? And the thing that you need to focus on is company earnings. That's ultimately what drives equities. We're fortunate, we've got a big team. There's 100 dedicated emerging market and Asia Pacific investors in the team. Last year we had 5,000 meetings with companies on the ground. And what we heard in 2016 was that earnings were turning. 2017 was very focused on technology companies leading, but what's good about 2018 is that we've seen more broad-based earnings growth, and that is encouraging for us when we think about over the next 12, 18 months.
So how sustainable is this, as you previously said, Luke? Is this going to be okay for the rest of the year, for the next couple of years? What's your take?
We think that emerging markets are only mid-cycle. As I mentioned, we saw the turn in 2016, and company earnings continue to recover from here. What's important is that the US dollar has a big impact on our markets. When it was rising, strengthening, that was a big headwind for us from 2011 to 2015. And as it's been softening, mostly, it's a long trend, that's been a nice tailwind for us. So we think it is quite sustainable.
So going ahead, what do you foresee? Mostly looking at the impact that the dollar can have on the emerging markets.
Yeah, we're going to have periods recently when the dollar is going to strengthen, but we think the broad trend for the dollar is going to be weaker for here. We think emerging market currencies in particular look just below fair value. They're slightly cheap. So we don't see emerging market currencies being a risk as they were 3 years, 5 years ago.
So let's talk about China. Obviously, it's the most important market in the emerging markets scenario. What do you think of China at this point in time? Is there a good growth? Is it sustainable growth? What's happening there?
Yeah, it's critical to understanding the outlook for emerging markets. So what we'd first say is that China went through a period of stimulus over the last couple of years. And what they're trying to do now is taper the growth, to have a controlled slowdown of that stimulus. And we think they're being successful. And the reason behind that is that current policy is to focus on the quality, not just the quantity of growth. And that's helping reduce risk within the economy. And let me just give you one example. There's been a policy of supply-side reform. What does that mean? In industries like steel or coal, where there was excess capacity and the companies were not profitable, which weighed on the banking system, the policy has been to shut down steel and coal capacity. And if you take a company like ArcelorMittal, the largest steel company in the world, over 100 million tons, they did the equivalent of stopping all production at a company the size of ArcelorMittal. So that's a lot of steel reduced. That's made the steel companies more profitable, and they're now paying down debt. So we think there's less risk within the economy today, even as it slows.
So are we still looking at stock picking or sector picking in China as well?
Yeah, so I think there's two big trends within stock picking in China. The first one is the incredible growth of technology giants there. People will be familiar with Tencent, close to 1 billion users of their instant messaging and social media. But Tencent started life as a gaming company, so it's very broad. Alibaba, which has more sales than Amazon or eBay combined, but actually is going into areas of like big data. So the technology side is very interesting in China. But perhaps the best thing that's happening there for us as stock pickers is the opening up of onshore China. These are the A shares, and this is very topical today because they're going to be included in the main industries. And A shares, we think, offer a great opportunity.
So is there any other country in the emerging markets area that you find as interesting as China, Luke?
Yes, we're very fortunate. There are over 20 countries that we actively invest in. We've liked Korea for some time because remember we're in this synchronized global recovery. They are in the sweet spot of some other technology trends. AI, big data means there's more use for semiconductors, and companies like Samsung have benefited from there. So the North Asian exporters have done extremely well. We would also say in other parts of Asia, the ASEAN, the Southeast Asian markets are looking more and more interesting as well. But we find stocks across Latin America and EMEA as well.
So do you think that at the moment emerging markets could be more interesting than the Western world, considering that we have seen the Western world growing up for quite some time now?
Angela, I'm involved in, there is some bias here, which is why I started talking about our multi-asset team. But I think that we're in a good position. One of the things that does concern us is the global cycle is maturing. Now our US investors, my colleagues, think that a recession is 18 months more away. So we've got time for emerging markets, for the earnings to come through. Valuations are no more than mid-cycle, and people tend to go through big cycles within emerging markets. Everybody loves them or everybody hates them. And today we think it's a more neutral. So that we think is a good indicator that the cycle and the performance of emerging market equities can continue for here.
So we were talking about sectors. You love technology, I gather. What's your take on the other sectors? What are the other sectors that could be interesting now for investments? Do you look at energy, for example? Do you look at something else that's in this kind of commodities?
And commodity prices has been picking up. That's part of this global reflation that's helping emerging markets along with the better trade. But we tend to, in fact, we always prefer to focus on the domestic side because ultimately it's about a growing middle class, rising wages. And one area where we have very high conviction at the moment is in financials. And let me just give you a couple of examples there. A lot of the best managed banks in emerging markets, they weren't distracted like European banks were with the global financial crisis. And they've been investing very heavily in technology. There are Indian private sector banks that have leading edge apps for banking. And in fact, we would say that they are now leapfrogging Western banks. They're slowing down branch growth because it's all about their digital platform. So you've got some very interesting banks.
This is really interesting, Luke. Sorry if I interrupt. Is this a trend that we see in other emerging markets, or is it mostly in India?
No, I think it's really across emerging markets. As I say, we've seen this through history in emerging markets. they can look at how the West has developed, and then they can create new business models. But this is increasingly the case within emerging markets because they're going up the value chain, and that's particularly prevalent in China. But think of a company like Samsung, which was, the products they make today,
sure.
how competitive they are. One example that we particularly like, though, is in insurance. And if you think about big data, and by the way, we're using a lot of big data techniques to inform our own investors today, but insurance companies have a lot of information. And there are companies in China, but elsewhere, that are using that data in order to speed up the processing of insurance claims. And one of the largest insurance companies in China, says that about 85% of claims processing is now done by artificial intelligence. So in some ways, emerging markets are beginning to lead in some fields.
What about Russia? What's your take on Russia now, mostly with the sanctions and everything?
Sanctions are very difficult to predict. We've been through many rounds of sanctions here. Our sense in the short term is that the US is pulling back, giving some space on that. We don't expect an escalation there in the short run. But Russia today is in a very different position from where it was in 2014 and 2015. You had sanctions in 2014, you had the oil price collapse in 2015, and Russia's been through a normalization process. The economy is in a pretty good position, and we don't see a lot of external debt there. So we think fundamentally from an equity investor's perspective, there is lots of stock level opportunities, but of course we need to keep an eye on sanctions risk.
And Luke, just to sum it up, do you think that Russia is the most risky of all the emerging markets countries, or you can foresee others?
Certainly one of the most volatile, and that's how we think about risk. What we would say is that over the very long run, investors have made good returns from Russian equities in US dollar terms, but it comes with a lot of volatility. And that's why we think that for most investors, having a diversified, broad exposure to emerging markets with a fund manager with those resources is critical in order to identify those stock levels and not to have very specific risk to one country like Russia.
So volatility anyway is key at the moment for emerging markets as well, not only for the global markets, Luke.
I think what we really hope our investors understand is that there are very attractive, often higher returns from emerging markets, but they come with volatility. The critical thing is to take a longer term investment horizon and not be panicked out at the bottom or to get too over enthusiastic at the top. And as I said, we think we're mid-cycle today, so there should be, despite our expectations of volatility rising, we do think there's a lot of opportunities.
Luke, thank you so much. It has been a real pleasure having you
Angela,
with me today. Luke Richdale, Head of Emerging Markets Equity, JP Morgan.